Well, good afternoon, everyone. This Monday, 29th June 2020. Been a little while since I've jumped on here, but I thought things are starting to look interesting, so now's the time. So we looked at this chart back a couple months ago. This is the Dow Jones Industrial Index. As you can see up here, top left, where my mouse is. And as I take you through, guys, I'll try and explain things at times using the mouse. So we'll start here, monthly chart. You can see I drew in this head and shoulders pattern right around this bottom here. And look at this. I drew it a bit lower, but it came up a bit higher around the 8.8 Fibonacci level. I don't have that in my charts. Came up around there, and with 1 day and 14 hours left, we are forming this beautiful bearish high test, rejecting. So price this month has come up here, rejected, and it's now pushing back down, open, high, now it's here. So price is now lower than where it opened this month. And the very low point you can just see a little bit down here. So if we close like this pattern is then confirmed for me because we've had this nice rejection candle confirming the head and shoulders, which is at the top of this bullish run, this bullish trend. And these patterns are very powerful when they are on the end or towards the end of a bullish trend. So this is a bearish pattern on the top of a bullish trend. So if we go here to the weekly, got these Fibonacci levels drawn in. You can see we've made a clear lower low, previous low, and now we're making this lower high, previous high. And if we close this way, that further confirms that we could be seeing further downside. So if we draw in here some Fibonacci extension targets, which I'll actually draw on the monthly chart to make it a bit easier and clearer. If we draw the Fibonacci extension on there, so you draw it from the top of this wave to the bottom, and then to the pullback, and then that you see perfectly lines up. Look at that. Fibonacci extension 1.272. That's my next sort of furthest target, which also lines up with this previous high back in 07 before that drop there. And then potentially as far down as 1.618, or who knows, it could drop further back down to this low here. But for now, step by step, day by day, it's very aggressive or long term, and we don't have enough information to determine whether it's going to get there. But for now, we have this, and if it closes this way, I'm looking for at least back down to here, wait to see 200 EMA level next, and then down to this target here at 13,331. And that is a bit higher than the 1.272 extension. So nice looking charts, really nice, very interesting. If we go now to the S&P 500, you can see it's not as good, but it's forming a left shoulder head, right shoulder with the same time left on the month. Difference is we're still above this weekly 50, whereas here you clearly see that we're pushing back to the bottom, or we've pushed back through it. So funnily enough, in the S&P 500, the top 5, 6 companies are equivalent in market cap to the other 494. And those companies, because this is a basket of the top 500 companies in the United States, the top 6 affect this quite heavily, and you can see that here in the charts. You can see that the Dow Jones has broken through this weekly, but this still sits above it. And if we go here to the technology sector, so what I like to do is you look at the big picture, so an index or an indice, then you look at the individual companies in that, or the sectors even, then you look at those individual companies in the sectors, and that way you put it all together and you see your overall bias. So when they all fit, when they're all showing bearishness, then that to me is pretty good. That's what I want to see. They're all aligning. So technology, where are we? Here we go. So QQQ, which is a very well-known technology ETF. I think this is the largest. You can see here on the daily time frame, we clearly broke higher than this previous high. We had this sell-off back in Feb, March, and this pullback now. And if you measure, we've had a 52% pullback. So if you then look at the companies that make up them, look at these charts. All-time highs. Microsoft, that's one of them. Amazon, another one of them. All-time highs. Apple, same thing, all-time high. Google didn't make an all-time high, it made a lower high, and now it had this decent sell-off on Friday. Facebook, all-time high, selling off. So, you know, Tesla, same thing, all-time high, and a lot of them have done that. So, because of their weighting in the S&P index, on their strength has basically held up the overall S&P. So that's not the best indication of where we are overall, because technology is what's top 6 companies. So Microsoft, Amazon, Apple, Google, Facebook, and what's the other one? Netflix, maybe Netflix. Look at that, all-time high. So it's crazy. Technology is so strong, and funnily enough, a lot of them, these big ones, Apple, Microsoft, have very large cash balances, which during times of lower income gives you much more breathing room. So I want to show you now some of the other sectors that make up the S&P. Look at this. This is energy. Look at this chart. Look how bearish that is. Now these same companies are also a part of that S&P 500 basket. And look at that, so bearish, it didn't even pull up near that 50 on the monthly. It barely even made it to 618 on the weekly chart. And the daily, we can see here, same thing. Now it's dropping. This is another ETF, Vanguard, and the other one was Spider. These two are the largest. Same thing. Couldn't make it, didn't get there. So these, you can see this sector is absolutely taken a massive beating. Funnily enough, I'm actually shorting it because it's very weak. Financials is another sector, very weak. You can see here, look at this monthly chart. Clear lower low, previous low high, making this lower high now. And yeah, look at this, forming this beautiful rejection candlestick. perfectly rejecting up into 0.618 retracement. Now, I'm also short financials. If we go to some of the other stronger sectors now, biotech, look at this, all-time high, like technology, very strong sectors, all-time high. These are some of the companies that make up them. Moderna, we can see, made an all-time high back here in May 18, and now we're starting to sell off a bit. And it's the same thing, all-time highs, these are so strong. Another strong sector, semiconductors, all-time high, all-time high. And that's basically it. So the larger weighted and larger market cap companies, if you go to the ETF, let's have a look here, ETF DB, SPY, which is one of the largest ETFs. If we look at this will tell us what the holdings are. So here you go, Microsoft is almost 6%, Apple the same, Amazon, Facebook, Google. So those ones there make up 21% of that overall ETF. So obviously there's another remaining 80%, but of those 80%, there are weak and strong sectors. So that is equities. Let's have a quick look here at some of the others. This is Japan, Nikkei. Let's see, never made a higher high, made a lower high now. It's looking like it's confirming that. China, same thing, no higher high. UK, nowhere near it, very weak. This is European. Look at this beautiful rejection of 0.618. Like, guys, I can't really believe that these charts, it's clear, so clear. Clear lower lows, clear rejections, all confirming and showing that lower high, which means further downside in technical analysis. Yes, it could move sideways and then sell off, but yeah, it'll be very interesting. This is the Australian ETF, index, same thing, rejecting perfectly off this 0.618, 50 EMA, monthly 50 as well. It's absolutely beautiful technicals. So another thing I'll quickly touch on is crypto. Crypto had a bit of a sell-off, and crypto has shown so far to, I'll get rid of this, it's not relevant now. Yeah, crypto has sort of been correlating with the stock market, when the stock market sold off in March, crypto sold off, and Bitcoin is the leading indicator for crypto, as it is 60, almost 70% of the total market share of crypto. So you track that, the others will follow. We can see here we sold off in March, came back, and now we're sitting up here just sort of moving sideways, a bit choppy. Ethereum, same thing. XRP, I sold out all of my crypto for now, just in short positions basically in the stock market. Bit of long volatility, but yeah, I'll be looking to buy back in. I want to wait for further confirmation that this bearishness is coming to an end, some sort of higher low or double bottom here, then confirming that yes, this bearish trend is starting to come to an end, because volume has picked up. So we've got a massive rise in volume, even though the price has been going down, which is a good sign also. So let's wait to see. Anyway, that's pretty much it, guys. I'm not gonna. Oh, actually, we can talk about currencies. We'll look at the dollar index. So the dollar index, and you'd expect this, has pulled back a bit, and funnily enough, the stock market has gone up. And these two usually are an inverse correlation. So when the stock market is bought, the dollar is sold, and vice versa. So that's why back here in March, look, the stock market sold off, and the dollar, there was a demand for it, people selling their positions, going into dollars, demand for it as its sort of reserve. And yeah, now we've had this bit of a sell-off. So interesting to see what happens. The 10-year yield, look at that candlestick that it might be closing this month. It's got to do a lot to change that scenario. That's so bearish, which is not good. Not good. Interest rates are already very, very low. Anyway, guys, I think that's about it. Nothing really I'm watching for currencies. They've been pretty indecisive lately. Had a couple of losses. But yeah, anyway, that's it from me. Hope everyone's well, and I'll hopefully do another one of these sooner rather than later. Just be patient, keep your eyes on for these further confirmations, and beginning of the month, if it closes like this, let's just say you can make lots of money to the downside, and it's very quick. But always remember to manage your risk and be level-headed. Anyway, thanks guys. See you.